Hi everyone, Darko here for your weekly trade example. We took a trade on pound Aussie. Let's hear what I had to say about this trade and I will talk you through it. The good thing with the market is the market always give you like several chances to enter a trade. This is identical neckline, a very strong level of resistance. And what do we have in here? You have a weekly ACAT. Okay, so now this is a new signal. Okay, so now we can take this trade, same trade, nothing has changed unless we hit this opposing level. If we do so, then I will just cancel this trade. For now, it's weekly ACAT at identical neckline resistance, hands on obviously. And the question you need to ask yourself now is like, because I don't see any super clear level of support and resistance to enter this trade. Well, I draw a fib. Where is the 618? Well, you either enter the trade. Let me just go back and watch if, yes, I have marked this identical neckline. Perfect. I haven't changed that. So option number one, you take the 618 fib entry. Option number two, you wait for price to hit this significant neckline. Either way, which one you take, both are like very close, so it doesn't matter which one you take. The stop loss will be above this high, and then you trade it as a hands-on, and let's see how things go. So hopefully this goes up, cut loss filled, and then drop down to the level of support for taking profit. There you go. You heard the reasons behind this trade that was pointed out in advance. Way before it happened. We talked about the setup around in here, and I said the entry was there were two options: the 618 fib or the structure resistance, where I entered around 82, and the risk for this trade was around just around like 95 pips. Okay. We always give it 25 pips, and this went down, one-way ticket down, made over 200 pips. That's 2 to 1. Okay, so I took 50% off, and I moved my stop loss to break even, and I get stopped out on the remaining part. So this is a good good winning trade. So yeah, this is the type of trades that I point out to my clients for educational purposes, and I teach them how to read price like no one else in the market. One of the most important things that you need to understand is the language of the market, where you need to know what the charts are telling you. Okay, we had a phenomenal year of trading, live coaching, and 2022 is heading to an end. And I'm very optimistic for 2023, where we will be involving the yearly chart more than ever, and 2023 will be the best year ever. Okay, so far for the past 5 years, every single year has been twice as much better than the previous year. Next year will be no exception. Okay, that's it. If you have any questions, feel free to send those to Vic Noble at forexmentor.com, and he will get back to you as soon as possible. Hi everyone, Darko here for another weekly trade example. We had a trade on USD Yen. Let's see what I had to say about this trade in my weekly PMA that I provide for my paying clients in advance. And let's see what's happened later on. I will talk to you soon. Cheers. USD Yen. We want to take this trade because I hope I didn't mess this measuring. Yeah, I don't have any calculator right now. I assume that you guys have been pointing that out if the numbers were wrong. Price is breaching that level deep enough to use as a natural stop, and then we convincingly reestablish with background space, set and forget. Entry in here with a low stop loss aiming to the upside. This is a pending order. We also have an inside bar. That's also one of the candlestick formation that we are watching. Not one of my favorites, but it is nonetheless a candlestick formation. Inside bar is a reversal candlestick formation at level of support. We also have a set and forget. Well, it's a pending order. Okay, that's it. Again, another winning trade. This was a pending order. Even if you risk reduce this, the difference between here and here was 18 pips plus spread, 2 pips, 20. The stop loss is 25. I wasn't even close to get stopped out. So yeah, another winning trade. Geez, all these trades. The risk was from here down to here, 160, 70, 85, almost 270 pips. Took something off right now as I'm speaking. The remaining part, 2 options. Option number 1, you move your stop loss to break even. The second option is you just have it 25 pips below this low. Okay, so this can never be a losing trade. It's another winning trade. Okay, there you go. You heard the first PMA and then the second PMA when I covered the trade management. So you know the reasons behind why we took this trade. This was the entry. Okay, we got filled. The risk for this trade was, let me see here, from here down to here is sorry about that. Let's just give me 1 sec. I need to make this bigger. 154 plus 25. Okay, 150, 60, 70, like around 180 pips. This went up to almost 270. So okay, we took the partial profit off, risk reduce, and let's see what happened with this trade. Even if the trade, the pair goes against us, stops us out at the reduced risk, this will be a winning trade. Okay, and I grabbed the mic, covered the trade management part. While price was at this level, I said, you know what, this is the first target, take something off. You can move your stop loss to break even. Now it's a huge winning trade, and if you reduce risk and price stops you out, it will be a winning trade regardless. Okay, so these are the types of trades that I'm pointing out for my paying clients, and you have to ask yourself this question: how was your year this far? Because the year is coming to an end. Christmas and New Year is around the corner, and you have to look yourself in the mirror. How did you perform? Are you happy with your results? I know that I had a phenomenal year, and if you only took these pending orders that I'm pointing out, not because we are providing a large service, but I'm giving you the reasons behind the trade way in advance, and if those are in alignment with your game plan, well, nothing is preventing you from taking these trades. Okay, so yeah. Do you have a trading mentor that actually our real deal, that is working and also showing you stuff that actually works in the live market? Because most people are hindsight coaching. Okay, they are showing you stuff in hindsight, and in this specific case, I'm showing you everything live, and I'm showing you that my trading system is actually working in the live market. And I also, when I'm grabbing the mic, showing you the levels, I tell you everything you need to know about every single trade. And yeah, there are times where there are less trades. We stay aside, regroup, chart exercise, sharpening our tools, and then when the market provides us a no-brainer entry, then we just take those trades. Okay. Hi everyone, Darko here for another weekly trade example. I'm on fire this week, recording lots of videos for you. We had a trade on Kiwi Yen. You will hear me talk about in 3 different PMAs. Way before this happens, while it happened, and the pending order and the trade management behind it. Okay, so you will hear everything, and everything, as you all know by now, is recorded in advance, not after the fact. Okay, so let's hear what I had to say about this trade, and I will talk you through it. Cheers. Yen price is yearly is up, monthly is up, weekly is up. What I'm seeing happening is a potential breakout long. Okay, price is giving me higher lows. Okay, this low is higher than this low, higher than this low, higher than this low. Okay, we have a very strong necklines on a weekly chart. What could happen from here is a clear breakout long, and you have these natural stop, you have these micro natural stops. So look for a breakout long. Needs to be very clear. So I wouldn't take like some iffy breakout like this. Just give me something that I just, a no-brainer long. So that's on my radar. Kiwi Yen. Kiwi Yen, I was talking about a potential breakout long for the reason I mentioned in my previous PMA. Yearly has been very strong for the past 3 years. Monthly and weekly is clearly up. So what I do want to see in here, what I do want to see in here is there was like a triple necklines on a weekly chart. The weekly candle closes 100% bullish. We are trading in alignment with the trend. That means I am allowed to go down to my 4-hour time frame and see if there is any potential longing opportunity. And what I do see in here is that actually price giving you a breakout long. This high took out everything. Not everything, it took out this previous one, not this one in here, but there is enough power for this trade to move forward. So this is a pending order. The only concerns that I have is that price might do a deeper retracement and give us like a daily, like something like this. Well, this one is much more safer to take than this one. Okay, so price could very well go down, do something like this, go up, and then do this. If that happens, then we will have a losing trade. I'm willing to risk 0.5% on my account. I had a great trading year, so this trade won't neither make me or break me. So this is what I'm looking for. So this is a pending order, and if you want to wait for this version, do it. There is no need to take anything that is not within your game plan. So make sure that every trade you take is first and foremost is within your game plan. And if it's happened to be a pending order, then you have 2 confirmations. First of all, you saw it yourself, and I'm confirming that trade. Or I show you a trade, you go back and do your deep down analysis, and you say, you know what, I don't want to take this trade. It might sounds good to Darko, it doesn't sound good to me. No worries, this is not an alert service. So the main reason is to actually teach you how to do things properly. And obviously, if you have been with me or seeing my social media videos and all the PMAs for the past 5 years, you will see that that the vast majority of the trades that I'm pointing out in advance is a winning trade, winning trades. Okay. Kiwi Yen. Kiwi Yen was another great trade. Price went into this level. We got filled with a low stop loss, hands on. The risk was from here down to here is 40 plus 25 is 65 pips. Price went up, barely one to one, because of the time of the year and everything. Maybe took something out, reduce risk. If you get stopped out, it will be at least a break-even trade. Okay, at least a break-even trade. Maybe slightly, reduce win, or like I said, break-even. Nothing wrong with that. There you go. So we got filled in here. Okay, the risk on this trade was let me see, from here to here is 40 plus 25 is 65 pips. Price went up almost to 1 to 1. Okay, and I always say, time of year, everything is hands-on. Take off the risk as soon as possible. Have a free look. You can move your stop loss to break even now, or reduce risk at least below this low in here. So this trade is depending how it evolves itself, because this is still fresh. If we go up, well, we just take the second target somewhere up in here, a big winning trade again. And if price goes down, a break-even trade or a reduced loss. Okay, we don't know that right now. Let's see how price behaves, and we take it from there. Okay, that's it. So, like I said, this is the trading service where I learn. Teach you the language of the market, how to read price. There's no indicators, no clutter, no stress. This is long-term trading. You can have lots of obligations. You just need a couple of, maybe an hour or two to go through, scan the pairs that you are trading, put those pending orders in, and leave the office. Live your life. Okay, zero stress involved. You know, I'm making more money, more pips, more everything, more trades. So yeah, and I have plenty of time to do other stuff. You know, have a day job, spend time with my kids, and you know, live my life, and you know, be at my office. Obviously, I'm a trading coach, so I'm exercising, chart exercising, and going through charts, journaling. For you that is not a trading coach, you just need to spend an hour a day, go through the charts, put those orders in, and leave the office. You have 23 hours left on the day. You can do whatever you want. That's the freedom that I always dreamed of. Okay. Hi everyone, Darko here for another week. For another weekly trade example. I had a request on YouTube, if I'm not mistaken, about someone asked me to do analysis on NAS 100. Sure, I would love to. So what I'm doing is that I always start with the yearly chart, okay? And obviously this yearly chart is one-way ticket to heaven. There's just heading up, up, up. We had one bearish candle action in here, and we seem to have another bearish candle action in here, and we have one in here. Other than that, this has been just going up, up, up. So we can all agree that the yearly chart is bullish. Okay. So let's go to the monthly chart. And by the way, there seems to be some problem with my cursor, so I will be using my pen in case there is some IT issues with my cursor. Okay, well, what would you say about this monthly chart? Is it in a downtrend or uptrend? Well, this is heading up. Okay, heading up. We ranged. We're heading up. We retraced. Okay, heading up, retraced. We're heading up again. We had a minor retracement, and now we have a very healthy retracement. Nothing wrong with it. The trend is still up. The overall trend is still up. Okay, we are retracing. Okay, now you need to ask yourself, you know, the yearly chart is up, the monthly chart is up. We had a very strong level of support on a monthly chart in here. Okay, let me just grab my pen for you. This is a strong level of support. Okay, another level of support will be down in here. Okay, so how did we react from this level? When price hits this level the first time, bounce up into this level of resistance. Okay, then we came down. What I do see in here is we build a monthly ACAT. If you're not familiar with my own designed trading patterns, an ACAT is when price hits a level of support and resistance, in this case support, and gives you a bullish candle action. This candle in here is a bullish candle action. Price open in here, breached this level, went down, and we went up, closed very bullish. Okay, so now for the next coming month, you will be looking for a trade. Okay, if I go down, just give me one sec. Sorry about that. So if I go down, this is the month of October. Then the pattern should be on the month of November, and we go 2 time frames below, from the monthly down to the daily. Okay, so this candle in here was the 1st of November. This retracement in here is the 1st of November. Okay, now you need to see if there was anything, how you can trade it. Maybe you are taking this neckline in here. Okay, then obviously the fill was in here. Regardless where you enter, the stop loss needs to be below, and obviously that worked out. Well, it's all in hindsight now, right? So what is about the future? Well, if I go down to my weekly chart, what do I see? I do see that prices, we double topped. Okay, we make a lower high, another lower high, and this is a potential another lower high. So we are in a downtrend where price is making lower highs, lower low, lower highs, lower low, a potential lower high. So 8 times out of 10, when that happens, we are making another lower low. If we are doing so, because this reaction in here was from this level of support. Okay, this reaction in here was at this level of support. Where's the next level? Well, the next level is this level in here. Okay, it's also this level. So that's where price seems to be heading down to. Okay, could this stop at any level before? Well, here's the thing. Price is retracing back into this monthly level again, so we need to keep a close eye to this monthly level. Okay, we are heading down to right for Monday when the market opens, we are heading down into this, retesting that monthly level. Are we holding that level? Because the previous monthly candle is bullish. Okay, so there is a chance that price will be reacting from this level and do this. And by watching this level on your monthly chart, sorry, on your daily chart and on your 4-hour chart, and see if there will be any structure damage, that could be a clue that price might be holding this level. But the probability is that we will be breaching that level. But this is trading. I never ever predict the market. I mark levels of support and resistance. I have a bias and an idea of what I'm looking for. When price hits those levels, I go down to my lower time frame and see if I see a structure damage. If I see so, that's a heads up that we might be holding that level. Many people once ask me, hey Darko, where will the dollar index be 6 months from now? Or what do you think, the pound dollar will be 2 months from now? Well, I don't have a crystal ball. I have no idea. Nobody does. Nobody can tell you where anything will be like 2 days from now or 1 day from now. That's one of the biggest misconception we have about trading, because you think you need to predict the future. No, you have a bias by doing your proper analysis on your higher time frame. Not many people watch the yearly chart. Don't worry about it. But you need to have a 4 window, in my case 5, a 4 window where you have the biggest time frame in here, and then you have where you draw support and resistance and trend on. If this is box number 4 for the bigger picture, box number 3, box number 2 is for trend, support and resistance, bias, and box number 1. In my case, I have 2 options, because the daily and the 4-hour is my entry, and I watch the yearly for the bigger picture. So then you have your entry time frame. So once price hits those levels, you go to your entry time frame and see, do I see anything that I'm trading? Most people are just all over the place, trading like 3,000 patterns, and you are probably losing by the end of the month. You are not consistent. But those who are professional about this, they have 1, 2, in my case 3 patterns that is own designed, and I'm waiting for one of these on my entry time frame. I usually look for swing break rotation and set and forgets. Okay, so if this comes down into this level, which I pre-marked before price hits that level, and I see a swing break rotation or a set and forget on a daily or on the 4-hour, whatever comes first, then I know that's a clue that this level will be holding. And if this level gets breached, then we are heading to the next level of support on my higher time frame. Once we hit that level, like in this specific case, you wait for a pattern. In this case, we get an ACAT. Okay, next time we might get a set and forget. The third time we might get a swing break rotation, or maybe all 3 of them. So that's super important. Once you understand this, your life will be changing. At least your trading life. Okay, so have a bias, look for support and resistance. What is the trend on monthly, weekly? And then do you see any patterns on a daily 4-hour? That's for long-term trading. If you are short-term trading, then you are using different time frame combination. The analysis are the same. So what I'm teaching is, I don't care if you are micro scalping, trading the 5-minute chart, or if you are position trading using the daily chart as your entry time frame, and you are doing your analysis on the yearly, monthly, weekly. It's the same. It's identical. The only difference is the time frame combinations. Okay, that's one of the powerful things about the coaching that I'm providing, is you can use this on Forex, stocks, commodities, indices, whatever. Wherever you have a chart, you can do what I'm teaching you. And it doesn't matter if you're a scalper or a swing trader or a position trader or an investor, it works on everything. But you just need to know which time frame combinations do I need to focus on. Most people have 9 time frames. How can you have 8 to 9 time frames? Like watching the monthly, watching the weekly, watching the daily, the 4 hour, the 2 hour, the hourly, the 15 minute, the 5 minute, the 1 minute, and then they are contradicting. That the different time frames are contradicting each other, and you're confused. No wonder you are confused. You should be confused, because how can you have 6, 7, 8, 9 time frames and be all over the place? You have to know, because for the yearly chart, I know exactly what to look for. I'm not trading the yearly chart. That's only for the biggest picture. The monthly, weekly is only for trending. Okay, support and resistance, trend, bias, the candlestick formations and everything, support and resistance, if I didn't say that. And then these are my entry time frame. I couldn't care less about daily support and resistance. I couldn't care less about 4 hour support and resistance. This is where I enter. This is my entry time frame. I don't do any analysis on the daily and the 4 hour. So I only have 3 windows for building a bias. The rest is for entry. So I never ever put my eyes on these time frames for anything beside entering. Okay, so these are where I build my confidence about direction, about support and resistance, about what the market is doing. And this lesson alone will save you from blowing your account and make a change for your trading. Okay, so if this is heading down, we are probably heading down into, because we already reacted from this level. Okay, so the hidden orders around this level are consumed, and we never know if it's strong enough to make it more to the upside. This is the next level, where this level in here, and like I said, this neckline in here, in case my cursor is not working, this neckline's in here, this zone, this micro zone, is a strong level of support. Now it's time for you to go down to your entry time frame once price hits that level and look for a pattern. Okay, right now we are trending down. So and I cover the indices on Thursdays, so I'm doing this on weekly basis, step by step. Whatever I said on the S&P, everything presented itself later on. I'm doing live analysis on the S&P every single Thursday, and I'm talking about the inflation, talking about interest rates, the consequences, fundamental stuff, and then price is showing you. For fundamentals are for direction. Technical analysis is for timing the entry. Okay, you need to have the direction, and the direction is usually from the fundamentals. Okay, that's it. Hope you enjoyed this video, and thank you for your request. Hopefully this was giving you something that you find benefit. If you do so, hit the like button, and I will do more of these videos for you. Thank you so much, and I will talk to you soon. Cheers.